So do you think that the Fed will be able to orchestrate this soft landing without triggering the recession?
Well, no, and they failed before.
Hey guys, welcome back to Library of Wealth. Today we have Jim Rickards giving us his take on the current market. Rickards will also walk us through the crypto market and the current state of uncertainty, as well as the role the Fed has played in recent weeks that's leading to the biggest inflationary environment in history. He'll talk about Bitcoin and why there was a huge change in his sentiment towards the dominant crypto asset. This definitely shows that Bitcoin's use case is starting to make itself known even to its staunchest critics, something that has been inconceivable in recent years. Let's check out this interview with Jim Rickards, where he discusses his Bitcoin prediction and why he believes power is changing from the fiat money world to the Bitcoin world. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Just want to bring up cryptos. I know you haven't embraced them in the past, but I saw you recently on a new crypto talk
Oh
show
yeah.
on Bloomberg. Are you have a change of heart there on the crypto front, Jim? Or
I've been studying crypto closely since almost the time it came out. And part of the reason is I get constantly invited to these gold versus crypto debates, and you had the most
yes,
famous one in history.
thank you.
I was on the sidelines a little bit, but Frank Joustra and Michael Saylor, and they're fun. And I participated in them. I take them seriously. None of that has anything to do with Bitcoin or any other cryptocurrency. The right way to think about it, or the most advanced way to think about it, is part of an electronic environment that we're all immersed in that we're not aware of because we're in it. So we're in this environment, all of us, and this is having effects on how we think. It's not that everyone's like, oh, the Bitcoin's gonna take down the dollar. Bitcoin's the end of the dollar. No, Bitcoin is part of a larger electronic digital environment that we're all in that has erased the concept of money. We've lost the thread. We actually don't know what money is anymore. We pretend that we do. We talk
So
about
well
it,
said.
but
Yep.
we
Yeah.
don't know. And so I'm using the term moneyness. It has some characteristics of money. Some do, some don't. Some have more, some have less. Some have different features. And there's a really good piece of academic research, fairly recent, but the authors kind of wanted to update the classic definition of money. That was their point. And this is from Jevon and Menger in the late 19th century. And they were the ones who said, unit of account, store of value, medium of exchange. So it's like a Chinese menu. You can sit there and cook up your own kind of money.
Rickards goes on to say what he thinks about what's going to replace the US dollar as the world's reserve currency, and why, because of the infrastructure, China and Russia's current monetary system cannot. Rickards also believes that a global crisis is right around the corner.
So I thought it was really good scholarship and a great way to think about it. But taking that a step further, to my point, if I've got 600 choices on the matrix, then we don't actually know what money is. And that has much bigger implications than whether, Bitcoin is a bigger payment currency than the dollar someday. I personally doubt it, but what's going on is actually much more profound. They can ensure your privacy vis-a-vis the rest of the world. So Danielle Cambone has her digital wallet on if you have iPhone or Samsung, but you got your smartphone, you got your app, your Fed app, you have an account at the Fed, it's completely digital, you're getting the central bank digital currency in the form of US dollar, et cetera, and you're paying your bills and life goes on. They can protect that against the rest of the world, but they know it. The government knows it, and that's part of the total surveillance state. And that's the way it's being rolled out in China. So it's really a totalitarian mechanism. So, I mean, they already know your whereabouts. I don't have to pick on you, me, or anybody. They know our whereabouts from our iPhones when they're on. Unless you I have a Faraday bag, turn it off, put it in a Faraday bag. That's pretty good protection. But if you don't have that, they're following you around. But now they're going to every point of purchase. What did you buy? And getting back to our friend Christy Freeland. So what if you voted for the wrong political party or supported the wrong political cause? And they freeze your account, So it may be private to the rest of the world, but it's not private to the government. In fact, quite the opposite. It perfects the total surveillance state. So it's 1984.
What kind of crash are we looking at or talking about?
Stock market crashes tend to happen very quickly. They're slower in the bond market, and global recessions build kind of slowly, and global liquidity crises they seem to happen very quickly, and they do, but they build for a while, and so we're seeing all these things. Stock market kind of is almost the last to know. But one day the stock market wakes up and says, "Oh, gee, growth is zero, recession's looming, the war's continuing, the sanctions are getting worse, the supply chain's busted. I guess we better reprice." And you can go down 20% in a matter of weeks.
A matter of weeks.
That would be happening anyway. The Fed has got a quadruple tightening exercise going on. So they just tapered. So that's one. They just raised rates. That's two. They previewed the fact that they might actually reduce the balance sheet. That's quantitative tightening, or QT. That's three. And then in the last dot plot, even though the dots are kind of a joke, said that they would have more rate hikes sooner than people expected. So that's a quadruple tightening. Taper's over, QE's about to begin, rates are going up, and they may be going up for a long time. That's a recipe for a recession. As the Fed goes down this path, which they not only said they're going to do, but Jay Powell upped the ante the other day, said we might do 50 basis points, okay?
Yeah.
They go down that path, then they will cause a recession. That will absolutely happen. But whether it's late this year, early next year, or it could be sooner based on. See, now here's where it gets a little more complicated, because the economy, the global economy, and the U.S. economy would be slowing drastically anyway because of the sanctions and the economic war with Russia. We'll probably get the recession and the crash before the Fed gets the wake-up call. But no, they can't do it. The Fed can possibly do something about the demand side. The Fed can squash it by raising interest rates and raising mortgage rates and deflating asset values, et cetera. The Fed can't do anything about oil. The Fed can't do anything about the supply side. They maybe people think they can, but they can't. So right now, this inflation has come from the supply side. Now, how will it play out on the demand side? That's the question. The Fed has exploded the money supply, so there's no question about that. M0 has gone up by 400%. The Fed's trying to rein it in a little bit, but when you go from 800 billion in 2008 to 4.3 trillion in 2013 when they started the taper, to 7 or 8 trillion, which is where it was after the pandemic in the spring of 2020, there's no question about the money printing. But that money doesn't go anywhere. It doesn't do anything. It's basically the Fed expands M0 by buying bonds from the banks. They take the bonds on the portfolio. They give the money to the banks. Money comes out of thin air. But the banks just give it back to the Fed as a deposit in the form of excess reserves. So you're inflating the liability side, which are the excess reserves, and the asset side, which are the bonds. You've inflated your balance sheet. You've increased M0, but you haven't done one thing for the economy. There's nothing about what I just described that goes into the real economy. Now, where does money for the real economy come from? It comes from commercial banks lending and consumers spending, and that shows up in velocity. And if you look at the velocity statistics, they've crashed in the last 10 years, and they're still going down. So the reason so-called money printing doesn't turn into inflation is because the money doesn't go anywhere. People are noticing. I mean, they notice, and it has a huge political impact, but it's coming from the supply side. And I have spent a lot of time studying the supply chain, so I could see that. Then the war in Ukraine and the sanctions were like putting a turbocharger on it. Okay, it's worse, and it's going to get worse. So how does that reverse? How does that turn into disinflation and finally deflation? The answer is there's a feedback loop. When price at the pump, well, first of all, gas prices are going up. We all know that. They've practically doubled, more than doubled. But people need to drive. There's some discretion, but you got to get to work. You got to visit the relatives. You're out there driving. So you don't have much choice about it. You just have to pay it. But that reduces your discretionary income. It means you're not going to buy something else. You're not going to go out to dinner. You're not going to buy a present. You're not going to buy a new TV set. There's some other thing that you're not going to buy because you had to spend more at the pump. And that would not be true if real wages are going up, but real wages are not going up. So monthly we get the employment report, and it's been showing that wages went up, let's say 5% on a year-over-year basis. And that's about what they've been going up. And everyone say, look, wages are going up. No, because that's 5% nominal. But we just said we have 7.5% inflation. So when you subtract the inflation from the nominal, real wages are negative. They're going down. So now we're doing it again. But Wall Street, it's not going to take as long to play out because Wall Street has seen this movie before. So here's the thing. This is your question. Can the Fed normalize interest rates, which I would call about 2.5%, and normalize the balance sheet, which I would call around $3 trillion, without causing a recession or a stock market crash or both? The answer is no.
Jim Rickards says this is a make or break time for markets around the globe, as the crypto industry at large has too many working parts now to be stopped. Although he does have a slightly different opinion on government regulation, only time will tell. Rickards isn't surprised about those that hold a favorable position with the United States government, especially those that support the dollar as the world's reserve currency. He doesn't believe governments should be involved and says that Bitcoin's longevity is designed to survive without intervention from any governing body. What do you think about Jim Rickards' interview? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.